what's the difference between LLC and S corporation? And LLC basically is done on a state level. You register your LLC on a state level. And it's actually a type of company on a state level. There is nothing on the IRS website recognized LLC. If you registered an LLC, this is more of you protecting your business on the state, not your personal, actually, your personal belonging. So you are separating yourself from your business on the state level. Now, on the federal level, you file as if you are sole proprietor, as if you are just freelancer. You file with your tax return. So you, in your personal return, you file for your business. In your personal return, the 1040 form you file for your personal return every year, you add Schedule C. Schedule C is the profit and loss for your business. So that's how you file for LLC, and it's due, of course, with your personal return because it's just part of it. S Corp, on the other hand, is not something you register for. You elect to be an S Corp after you do the registration. And you could be registered as LLC, partnership, or C corporation and do the election to be taxed as an S Corp. So it's just like an election. It's not that you register as an S Corp. This is very important to know because a lot of people go ahead and register right away and elect an S Corp, especially if you guys are using those online services where you don't have a lot of information. They have this option available, like register as an S Corp. They don't spend the time to educate you, especially if you don't call them and try to understand. I don't know if they offer this service. It depends on the person who answers the phone typically. But this is why you should get informed. So don't go ahead and register as an S Corp on these plus, because in these places like online places, because it's not good to start this way. And in a minute, I will tell you why. You want to start as an LLC, partnership, or actually C corporation based on what type of business you want to have, what's your end goal, what are you planning to have. So this is how you want to make the decision. So you need to speak to an accountant, actually tax accountant, and an attorney, just for protection and legal stuff. But make sure you speak to these two people, tax accountant and an attorney. We do consultations. Feel free to reach out to me and I'll be happy to help you with this. Because, I've seen a lot of people actually form their organization or their company in a different, in a wrong formation, like they choose the wrong entity and then they pay so much in taxes later on because, I know those TikTok people tells you have to be S Corp to save on taxes, but not necessarily. Not always. S Corp is not for everyone. So you need to be careful. Okay? So this is another difference. So S Corp, now you have to file, if you elect to be an S Corp, now you have to file a different business return. So it's not going to your personal. So you have to file for your S Corp by March 15. So a month ahead of time before you do your personal return. Why? Because you're going to get that K1 from the S corporation return and include it in your personal return. Again, you have to file S corporation return, a business return, by March 15, totally different form. And then that filing is going to give you K1, and if you have partners with you, everyone's going to get K1, and then you're going to include the K1 in your personal return. So that's going to be part of your personal return on April 15. So now you have to do 2 returns. And so that's like do 2 returns instead just to do personal Now you're doing personal and business. And another difference, when you have a LLC, you can draw money. You cannot put yourself on salary. When you are an LLC, you have to put yourself, you have to actually pay yourself withdraw. So you just take money out of your account. You cannot put yourself on a salary. Now it's the opposite when you elect to be an S Corp. Now you are required to pay yourself a salary if you want to get any money out of your accounts. Again, if you want to pay yourself as an S Corp shareholder, you have to put yourself on a salary that is a reasonable salary. So you want to make sure you are able to do that. You are able to do a payroll taxes, because when you put yourself on a salary, you're gonna be required to pay payroll taxes. So you will see some deductions from in your paycheck. You issue yourself a paycheck. So you want to be careful on this. On an LLC, you cannot put yourself on a salary. You just draw money, regardless of how you draw this money. It can be writing a check for yourself. It can be like wire transfer. It can be just getting cash off your account. Whatever the way you want to get this money out, you just get this money out the way you elect to have this money out. Okay. So it's really important for you to know what is every entity formation required. What's if you elect to be an S Corp or not? Like, is it time for you or not? I usually don't like to do it for clients unless we do tax planning, because this way we run different scenarios to see if it makes sense for you to be an S Corp or you should stay as an LLC. Because there are some things, like some tax strategies you can take a benefit from. If you are an LLC, you cannot do it if you are an S Corp, and vice versa. So you want to be careful on that. Don't just blindly listen to a TikTok person and then say, okay, this is what I'm going to do. You need to strategize. You're doing a business. You're not playing around, okay? So make sure you take a responsible decision. And when you pay yourself in an S Corp, you cannot really pay yourself $5,000 a year and draw $10,000, for example, or more. It has to be a reasonable salary. It has to be a reasonable salary. So if you're hiring someone, you're gonna pay that amount for that someone. If someone hires you at the same company size that you have, they're gonna pay you the same thing. And then you can take draw from, or you can take dividends or distributions from the S Corp. But you have to be paying yourself a reasonable salary. This is very important. A lot of people mess this up. Don't do that. Make sure you make an informed decision, okay? So what do you need to do? What do you need to have ready in order to be ready to file your business tax return? Regardless of what formation you have, you need to have your financial statements for sure. You need to have your financial statement. Let me know if you have any questions, because that will help me address the issues that you want to talk about, get you more informed about your tax situation, about what you need to do in order to be successful. I'll see you later.